The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Feeling good, Lewis. We're going to take a look at these markets like we usually do, starting out with the FTSE and the DAX. As you can see, they have pretty oblivious to our movement up. Yesterday we had a little bit of a movement, but really not too spectacular yet. The key word there is yet. Folks, as we all know, the U.S. dollar has taken a trip to Miami Beach. It is breaking down badly. Not to be unexpected, because we did have that very, very shallow rally that we spoke about several times here. We had that little 5-day rally into the 14th of August, and now we back down here. There is a little bit of support down there at 92.10. I don't know where we're trading right now, but very little, I might add. The euro has gone above the 119 substantially. I believe we've hit 119.50. That's a pretty big move, and we're also seeing moves in the other markets too that are related to the U.S. dollar. And this is the really important thing that we're looking at, folks, is today or tomorrow. This is what we want to be watching. Is we are looking at the possibility of the Bradley stock market model making some type of a turn here. Let's get it up here to take a look at it. And those of you that have heard me speak before, I've always said that one of my things on the bucket list would be to see a segment on CNBC or Bloomberg, 5 or 10 minutes, all about financial astrology. It'll come from a place like Andrew Lowe's from MIT or Yale or someplace like that. It won't be from Tucson, and it won't be from any other place like Sarasota. Well, it could come from Sarasota. Tim Boss is a pretty smart dude down there. But this is basically this Bradley model. When it works, folks, it's spot on, and it has been working perfectly since that March low. We made a high on March 11th, went sideways for 2 weeks. Actually went sideways for a whole month, and then we rallied up here, and we made new highs this morning, and here we are on the 18th of August. And so tomorrow is the day. It could be a day early. I don't know. But we want to watch it very, very closely. Yes, Arch was on Fox Business News yesterday with Neil Cavuto. Unfortunately, Neil spent most of the time apologizing for Arch not being dead. But I did speak with Arch, and he was okay with it and everything. So anyway, this Bradley model is coming together. Now, I have a rough time with some of these astrological things because they're so complex and they're very difficult. But when you have one that's set up like this, with this Bradley model, and folks, I don't think there's anybody that has more experience at looking at these models in the Bradley than me, because, well, Ruth Miller, and also Jim Twentyman, because we all did it together. But we looked at every year from 1885, and it really does have a really good predictive value. I mean, it's not just cannon fodder. It's really important stuff. So we need to pay attention to it. Added to all of this is, if you take a look, and we're going to have our one of our favorite guests. They're all favorite, of course, but one of our super favorite guests tomorrow will be Shane Smolian, thewolftrader.com, and he's going to be talking to us about this. But he did alert me to the fact that this year, if you look at when the Bradley model is topping like it is today or tomorrow, you have all of these planets in retrograde, folks. There's 5 of them, and that is a really big deal. And as we have heard from Norm Winsky, that he factors that in quite a bit. Maybe this is the year that the Bradley just totally melts down and we melt up from here. And maybe with the U.S. dollar dropping like this, that could be it. Now remember, if the U.S. dollar is dropping, that means that the value of probably notes and bonds is not going to go up with everything else, because we've dropped 6 handles down from the high, and now we've rallied a 1.5 up to that 78.30 level. Nice little ABCD Gartley yesterday. So if the market is any good in treasury bonds, it's probably going to start to go higher today. But why, I don't know. But that's just the odds of what you're looking at as you look at some of these things. So we need to pay attention today, folks, because today and tomorrow they're really going to be very important. And the stocks, even though we were real bullish this morning with the value of Walmart and Home Depot, the market has given back quite a bit of its gains. So I will be looking for a low risk entry here today or tomorrow. Most probably in the Dow Jones Industrial Average. It's been the weaker of the three indices. I don't trade the Russell very often, so I'll be watching for a potential sale in the Dow Jones Industrial Average. Not the NASDAQ, because it's too strong, and of course not the S&P, because the margin on it, the margin's getting pretty close to the same on both of them, but it has a lot less volatility than we have in the Dow Jones, because it's only 30 stocks, but it's still one of the major indices that the folks look at. So that's what I'm going to be paying very, very close attention to. Yesterday, we mentioned the fact that the Wilshire 5000, which is the broadest of all the indices, even more than the New York Stock Exchange Index. You'll be able to see here. Hold on one second here. I'll answer that question, Ruby, here. We had that big outside day in the Wilshire 5000. It didn't do anything yesterday. And also the New York Stock Exchange Index that we watch every week. All it did was have a little tiny rally yesterday, just virtually nothing. It didn't come anywhere close to taking out the 78% level that we made last Monday. So we're seeing signs of some rotation in these things, and that's important too. And we pointed that out by the chart that Rich Anderson sent to us earlier in the week, and I'll bring it to you again because it's still active. And that is, you're seeing that momentum is slowing here, and that can be a very important sign. You can see when it slowed, back in January, that was a tip-off that was something happening. But we've had this straight-up move, and everybody is totally infatuated with tech stocks, as they should be, because that's neither here nor there. So we got to watch it. That's all I can tell you. Now, Ruby's asked a question. Let me double-check that. I think it was about the Okay. Here, Ruby's saying, since the dollar index broke, will we see a meltdown in the dollar? Ruby, the dollar has been melting down for a long time. I think we're at the end of the run, if you want to know the case. Here, it started melting down back on March 23rd. That's when the bottom of the market was. That's when you can see the high in the dollar index was the low in the stock market. You see, so if you reverse this, and this is what we're possibly looking at, that's what we could be looking at. Now, remember, these ABCDs, they fail, they trap you, they do a lot of other things, but that's neither here nor there. Now, one thing that you've got to remember, on the long-term dollar index, 92, I believe, is the 61. Oh, dear, I forgot to put that in there. Son of a gun. The 92, I believe, is, I'm going to double-check that at the break, but I believe 92 is the 61% retracement on the long-term weekly on the dollar index. So let's check that when we get back from the break. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
The dollar index on a weekly basis going all the way back to 2011, and that's when our esteemed leader, Tom O'Brien, came on with the phrase King Dollar. It was trading at 72, and as you can notice, it stayed there for about 10 weeks, and then it started to rise all the way up to 104. We made a double top at 104, and we are pulling down to a 78% retracement here, folks, not the 61. The 61 was when it was back at 94.50. Then we rallied up for the double top, and now we're coming down here, and we have been down 10 weeks in a row, so we are definitely oversold. We are coming in to this major cycle. Now, just bear with me, humor me a bit, but just listen to the numbers. Remember, this dollar index topped on March the 23rd. What happened on March the 23rd? That's the day that the stocks bottomed. So that's something we need to pay attention, because if they're reversing, that could be a very important cycle. I don't know the answer to it. All I'm doing is looking at shorter term patterns to see if there's a good entry place here and whether these are going to work or not. Now, I stand corrected. The 92 level is not the 61% retracement on the weekly. It is the 78% level. And the number is actually 91.63. So we're still quite a ways from this level, so we could still have a tremendous spike today, which we're getting a pretty good spike in the euro, but it could continue into tomorrow, because tomorrow is the exact date. But with these planets all retrograde, that can throw a big wrench in. It might be off a day or two. I don't know. All I know is I think we're over something very large, and I'm trying to find a very low entries on all of these. And believe me, I am looking closely. I want to be short the euro. Actually, you should short the pound. That's it's a better dirty shirt than the euro. But these others, the Canadian has had a big move. The Japanese yen has had a big move. All of these are bringing into this fact that what we're looking at here is something pretty significant. And we'll have the answer most probably by Thursday. The one thing I know with a very, very high degree of probability is if we close lower in stocks on Friday, you don't want to fade that that Bradley model, folks. You just don't want to do it. I've done all of these, and I've seen years where this thing actually would go 18 months without missing anything. I mean, it was as if you had found the Holy Grail in it. And in fact, back in 90 and 91, when it was doing that, I thought in fact, that's what really happened. And that's when my newsletter, Astro Cycles, A Trader's Viewpoint, was, going crazy. And then, of course, we went into the start of the beginning of the .com stuff, and it started to shift. I mean, the dates were still good, but the overall perfection that you had during those 2 years was really quite phenomenal. And that's when the Bradley model became, very, very popular. And the book they were charging $500 for that little pamphlet that was made by Llewellyn Publications back in 1947 that they sold for $4, which was a lot of money back in 1947. So let's take a quick look here. I wanted to bring down memory lane here a little bit here to give you an idea of what was happening many, many years ago when I first started looking at this stuff. If you'll look at that blue arrow there, folks, that arrow is basically 1962. That's when I was a senior in college and just getting ready to go to work for Eli Lilly. That's when I really started to get in to the trading. It was mainly corn and beans and wheat and silver. Silver. Wow, I don't remember. No, yeah, silver too. Yeah, silver, and gold didn't start until 72. But that's it. But what I wanted to show you is that red one. You see that red arrow there? That was when the Dow was coming down from 1,000. This is the S&P. That's when the Dow was coming down from 1,000 in the Dow Jones. It was 1,078 was the high in 1972. We came all the way down to 540 twice during 1974. First in October. That was the October crash. We made the double bottom in December of 1974. And here again, on those dates, on the 4th in October, you had those retrograde planets all setting at conjunction, and then later on, 4 months later, you had them setting at the same thing, and boom, away it went, and that was the bottom of the market, and it topped, if it has topped, which it topped today in the S&P. No, it hasn't yet, but that we've been going straight up for all these years. We had the crash of 87 that you can't even see here. It's it's basically a blip. It's nothing more than a blip. So anyway, that's just what I'm bringing to your attention to tell you that when these things work, they're really big. But this is a big one, I believe, that we're over right now, and it should be fun to watch if nothing else. Now the silver and gold. Now silver has made it up to the 78% level at 28.59. Gold hasn't quite made it yet. It's only about $20 away. We got up to 23, I believe, today, 2023 in the gold. I haven't checked it in the last few minutes, but all of that was brought on, I believe, by the beginning weakness or the starting of seeing the breakdown in the U.S. dollar, even though it's already been breaking down since March 23rd. Now that people are starting to see that it's breaking down, maybe just a little too late, but that's neither here nor there. That's what they're looking at, not what I'm looking at. I wanted to remind our folks that, when we were looking at some of these things just recently, as last week, when we talked about the move that was coming possibly in the December wheat contract, thanks to our good friend Mr. Z. He was looking at it down there at 497. The low was 497, and we've rallied a great deal. We got all the way up to 526 last night, and all of these others that we were looking at too. If you remember, we were watching the pattern that we had in the November beans. We had a really nice pattern in November beans that was finishing, and now I can't find that nice pattern in November beans, and I don't know where it is. It was here just a few minutes ago, but I don't see it now. Shut the front door and raise the rent. However, we do have the meal up here because that was another one that was making a double bottom down there at the the 287 level. The low was 286 and change, and we've had a big move here. You'll notice on Friday we had the 135 pattern. But we had that big range up, and that was the danger sign that it was not going to work, because you made it in one day to 0.5, and now he popped through, and now we've got up to the 382 retracement of the whole range from last June, and it only took 6 days to get there, folks. That's not bearish. That's how silver got started. So pay attention. These things could really start to move here. Okay, Mr. Z's got a question in here. I'll try to answer that. He's already answered it for himself. So those of you that belong to the Tiger Den, you get a lot of super information there from Mr. Z and some of the other folks in here that know the fundamentals and the technicals of trading the grains, and it's a big help. So if you do trade the grains, lock in. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have a little conversation going on here in the den I'd like to talk to you about a little bit. It says, hello, Larry. I was playing with some stats on Excel yesterday, and this came, as you know, there were 717 moon cycles between 1929 and 1987, and the stock market crashes. When taking your August 19th, 2020 Bradley model minus 717 moon cycle, it links to the 2931 August 1962 top in the stock market. Stocks moved into an October low. There was a minus 10% correction. Maybe a coincidence, maybe not. But thank you very much for sending this to us. Those are the types of statistics that I like to look at and see. So all I know is, folks, I think this is going to be something really significant, and it's going to give us a really easy chance to find something. And I think it'll either be today or tomorrow. So I can't be any more. I haven't entered yet, but what I did do, I posted what I thought was going to happen this morning is it would make a bottom down here at around 27,780 or 70, something like that. In the Dow Jones, we'll probably get a rally. And if we start going below 27,500, that would be the first sign that Dow Jones is starting to roll over. But it's going to give you more than one chance to get in, folks, because this has been one very, very strong market. And not only that, it could be wrong. Yes, tomorrow is a new moon. And remember, we have 5 planets retrograde. We're going to have Shane Smolian as my guest tomorrow. So he'll talk to us about this. This will give you a better chance to look at it. So all I'm watching are the patterns. I'm watching to see the patterns. I'm also watching that dollar index because we're getting very close to that 78% level, folks, on that weekly cycle that I posted. And remember, if those double tops worked and that March 23rd worked and we're over, August 19th, pay attention. Well, you don't have to pay attention to it, but I think it's trying to tell us something. What? I don't know yet, but that's going to be interesting to see that dollar index. Has it broken below 92 yet? In the dollar index? Could somebody alert me to that fact, because I don't have that up and running while I'm doing the show, so it makes it a little bit different to take a look at it. So let's remind ourselves that that's what we're watching. We're also near something very important, is that Apple is very close to $2 trillion. I believe it has to get to 9217. Okay, that's the smaller, the larger 1.618 number there at 9217. But I think we've got a shot at 9163, which is the 78% level on the long-term weekly chart on the dollar index. So that's what we're paying attention to here so far today. Now, someone's asked a question about the $2 trillion in Apple, and I don't know if it means anything or not. It's a pretty expensive stock when you stop. Well, it's not that expensive. They just split 4 for 1. So, and what I think Tesla was up $92 this morning overnight. It hit 1,970 something. I thought I saw it on the Bloomberg this morning at 1963, 1970 in Tesla. So, yeah, Mr. Elon Musk is still dancing to the tune. So let's take a quick look at these markets since we just opened here. Let's see how we're looking this morning. The S&P is still rallying. We're up at 3384. I believe we're going to have some strong resistance at 3390 to 3400 in the S&P, folks. That's what I'm looking at from a short-term perspective here over the last couple of days. The other one that is interesting to pay attention to is the silver, folks. The silver is the interesting one because we did make that 78% level there at 28.59. We're trading at 28.52 right now, and if we're not above 28.59 in the next hour, that's not going to be a good sign for silver for the rest of the day. In other words, it's going to be losing momentum to see if what's happening. Now, we just talked about the Dow Jones Industrial Average. We're down here at 2764. I said to keep an eye on it because at 10:15 it should be making a bottom there. And that bottom, hopefully we're going to be above 2700, and then we have a rally that would go through quite a bit of the day. But there's where you want to start watching how the patterns line up. So the first bottom should come in here at around 2750. But if the market flips around and all of a sudden in the next 20 minutes goes straight up, then that would be a sign that the market's going to top early in the morning and not later in the day. So that's the 2 cents worth that I'm sort of watching. Crude oil, we got up to the 78% level yesterday at 43.20. We now backed off 80 points, 80 pips from that level. So that's another one that is giving us a little bit of information that we should start down in crude oil after that rally that we had yesterday. We did not take out those old highs at the 61% retracement, and we're now moving over into the October crude oil. That's going to be the one that people will be watching the most. So let's all remind ourselves to stay in. If you're going to do the crude oil, trade the most active, which will be the October contract. We've got the gold hit 24 and a half just a little while ago. We're down just $2 from there. And that still has the 78% level looming at 2043. So we've got a chance to see that over the next day or so. But the dollar will continue to weaken. That'll most probably bring silver and gold higher, because it makes common sense. If you're just throwing money at this thing and all of a sudden people don't want to take the dollar anymore, folks, this is going. If this persists, and we start breaking below 9,100 and stuff, then we're looking at something that is going to be very, very ominous. That means that the U.S. dollar has definitely, given up the ship, and we are heading down into some type of a spiral that I don't know how it will end. But all I will know is that people will not want to be holding dollars, whether they'll be holding cryptocurrencies or anything like that. I don't really know, but I will be watching those things very, very closely. We do watch the cryptocurrencies, and with gold going, breaking out to the upside, you can also see what's also happened to, the Bitcoin. It is still acting very, very bullish. And as you know, we are very, very bullish these, and we've been recommending one particular one for quite some time, Cardano, and that is more than doubled in price. But you'll notice here we've now cleared 12,250. Folks, this is no longer, those of you that thought that this was a, what you call that thing? I can't remember. Right on the tip of my tongue. It was not a, what do they call those big bear markets when they never come back? Oh, boy, I've lost the train of thought here for a second. South Sea Island, it's not a bubble. That was the word I'm thinking of. It's not a bubble, because we went from 19,000 and change to 3,100. Okay, and 3,100 we're back to 12,005. Bubbles don't act like that, folks. And if you did this on a logarithmic scale, you'll see that you could easily see 50,000 in Bitcoin. It literally could. I mean, hey, we've cleared $1,931 in gold, folks. There's no top up here.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, back, folks. We're going to take a look at the FANG stocks. They've been the leader of these tech things, so we'll look at them. The first one is Netflix. You can see the 382 retracement. We had the breakdown, and look what we're doing here, folks. This is not a very good rally for Netflix. So if you're interested in finding one of those five stocks, Netflix is the one that doesn't look the best. That's for sure. It's that could change in a heartbeat, as we know, but it's certainly not looking good right now. No question about it. The next one, of course, always in the news, is Google. I noticed that one of the executives from Google actually addressed the Democratic convention yesterday. Nothing like a little touch of politics in the tech sector, but it's setting exactly at the 61% retracement this morning as we speak. We took out yesterday's high, so it's still setting right there at the 61% retracement. And here we're going to look at the next one, of course, is going to be the big daddy rabbit, and that is the Apple. And boy, you talk about a market that just never wants to give up. It's approaching $2 trillion, folks. I believe 469 is the magic number. We've been to what is our high has been 464. So just another few dollars, and we will be up to that level of the $2 trillion mark that has been rarefied air. No one has ever had a stock that was worth $2 trillion. And if anybody's guess of history, 20 years from now, we're going to look at that and say, gee, where did Apple go wrong? I don't know if that's going to happen or not, folks, but Apple is a marketing company, and I think that they're probably going to, reach a level where they're going to have a hard time producing some of these results. The interesting thing about this Apple chart, more than anything else, folks, is this huge gap where we gapped above the 61% receive. You see the 218 there, that was the 1.618 expansion. That came in at $400. You notice we gapped above $400, went all the way up to $464 over the next 2 weeks. So we've got a gap there and a gap above that. Those gaps will be filled. The $64 question is, will it be filled in your lifetime? Probably not in mine, but maybe in yours. Who knows? We'll have to let the market decide. Now, the next one we want to look at is always in the news. And we're not talking about Twitter. We're talking about Facebook and Mark Zuckerberg's empire. We'll get this up here so we can take a look at this here. And you'll notice here that we're still backing off. We're at least after the high that it made up there at 278, it backed off about $20. And the last couple of days has gotten not much. It hasn't really made even a 382 retracement. That's another sign that the armor could be breaking down. But we've got another one that is breaking out of a triangle that we talked about yesterday, and that is the big one from Brazil, Amazon. We'll get it up here to see Mr. Bezos closing in on 200 billion, which is not a bad figure to look at. We just popped above the 78% level there at 32.44 this morning. We're up about $30-40. Oh, wow, we're up more than that, aren't we? Wow, we're up about $60, and we are popping above that 78% level. So that's a breakout to the upside. The only thing that would reverse this would be a move down below 31.65. So it's got to drop $100 just to break that triangle. So that's not an easy thing to do. So that's it. I wouldn't be, hey, look, if you're going long, buy these stocks. If you're not going long, find something else. The only one of these groups that really looks super bearish is the Netflix. The others don't look that bearish at all. Now let's take one more look here, and that is the Microsoft, because we have done some really good expansion work on this, and we're very close to a weekly 1.618 expansion at 219. We've been as high as 218. I think that's $1 close enough. We're now trading at 210. So that's another one sitting in right on the money. So that's why all these are at such a real critical level, folks. And here we are right over this Bradley date. So I really think it means something. Whether it does or not, remains to be seen. But that's what we're watching. And I hope that we'll have an answer before the end of this week to see if that's going to be the case. But that's what we're watching. That's all I can tell you, and I'm sticking to it. So we'll look at it. All right, how low did we get now in the Dow Jones here as we came in this morning? Let's get sure that we had this. So no, what did I do? I lost it. Shut the front door and raise the rent. Give me a break here, folks. I've got to get the Dow Jones up because I'm talking about the Dow, and I had it all ready to go. And I know I've got it here somewhere, but where it is right about here. And there we are. Give me 1 second and see how we are coming into right now at the time. See, that's what we're doing now. We got down to really close to 27.755. I was looking at 27.50. Now we've reversed and we started to rally up. So what it's most probably doing now is most probably making a top at around 10.15. And from that time, from 10:15 on, I would probably be looking at maybe the market would be down for at least till the last 2 hours of the day would be my guess, because it's starting to show some type of weakness. So that's another one. We're having a really big move here now in the some of the currencies. The euro has popped up a little bit more, and the British pound has just popped up another 40 pips. So they're starting to see some shaking of the tree over there. So that's making it very interesting to watch these things unfold as we start to look at these this morning. Let me get these lined up, because if I don't, then I can't refer to them, and I want to be doing it. We've got to the first level, 33.90 now in the S&P. I believe we're going to hit 34.04 today. That's my 2 cents worth, but again, I could be wrong. I'm often wrong, but never in doubt. But watch that one very closely. The NASDAQ just keeps going crazy. That's for those of you that have nerves of steel and pockets that are very full. So if you're going to trade something from the short side to the stock indices, pick the Dow Jones, folks. It's a lot less volatile. Has the same patterns. It's just that it's a little less volatile, a lot less volatile than the NASDAQ and the S&P. It's much, much easier to look at. And the resistance levels are much lower, so you don't have to worry about skyrocketing, and you shouldn't have to worry about skyrocketing markets anyway. And that's because the darn things you can put a stop in. Now look at the euro. We've got the euro now trading at right around 59.69, very, very strong. So we're going to be getting down to that number. We need to watch that 91.65, 91.63 in the U.S. dollar index, folks. That's the 78% level on the weekly basis. So that's the one. Once we went through 92.40, that's probably where we're going to be looking at it. So those are the ones that I'm sort of keeping an eye on this morning, of course. And here, let's get the British pound up. I'll just show you how close we are to some major support here in the British pound. If you'll give me a second, we'll get this up here to see that we're breaking out. We've got a big ABCD here coming up in the British pound. Just a little bit higher at another 50 pips higher at the 132.93. That's about 60 pips from where we are now. That's the big ABCD going back from March 23rd. As you can see, that's when the game changed. And now we're coming up to this level right here very, very close to that 132.96. 877-927-6648. And another show.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to remind you, folks, here we are back down here. Oh, there we go. There's our stock market coming right down now, right where it should be, 27.50. We got to 27.44. We've got about 15, 20 minutes to go. So watch it at around 10:10. We should be trading below 27.50, and from there we should start to rally in the stock market and catching a few people by surprise. And that's why you've got to wait until the exact time to get it to moving. Also is to keep a really close eye on the silver market, folks, because if we're not above 20.55 about this time of the day, which we're not, that tells us that we're most probably made some type of a high here in silver today, because the high at 28.60 was right at the 78% level. We didn't make it There we just made a new lows in the dollar index, I see, at 92.11. I think we're going to get to that 91 change probably later today or early tomorrow, so we'll watch that one very closely. Remember, tomorrow's guest will be Shane Smolian, wolftrader.com. He's going to do a special program for us on the use of the Bradley model and how these retrograde planets fit in. So I think that'll be very, very important. But I think this is a very large cycle that we're over. We must respect it because the low was on March 23rd. We had the May 11th bottom and we had the high. And also it made the high in February to tell you that we were going down, so you ought to respect it. I'm certainly going to, and as you can hear from my voice today, that I'm certainly watching it, quite a bit. So those are just a few of the things that we want to be pay very close attention to. So that's it. The people that are entering the markets here this morning, just be careful. Always use some stop protection in here, because these markets are not for the faint of heart. And if you're not using a stop, you're telling Mr. Market or Mrs. Market that I know more than you do. And that's never a good sign. So be careful, protect yourself. That's what stops are meant for, to keep you from getting out of the game. And that's the main reason why you've got to use them.